This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, August 19th, 2015. Euro dollar. So the euro has been pulling back in recent trade after stalling out by some key resistance at 112.15, which represents the 61.8% Fib retracement off of the May high to July low move. At this point, the overall downtrend remains intact, so lower tops are favored for an eventual break below recent support at 108.10, though we can't rule out the possibility of more choppy trade over the coming sessions, with the market seen potentially correcting higher above 12.15 and into the 113s. Really, right now, 112.15 is the key level to watch above, while 108.10 is the key level to watch below, and anything but in between is classified as some choppy consolidation. Sterling dollar. So cable broke some key resistance on Tuesday, with the market taking out 56.90, and this sets the stage for a potential fresh upside extension back towards that 2015 high that was set back in June at 159.30. At this point, only back below 153.50 would negate and put the pressure back on the downside, while a daily close above 156.90 would help to confirm the bullish bias and accelerate those gains towards and eventually above 159.30. Dollar yen. So dollar yen has been having a hard time establishing above 125 after the market stalled out in recent trade ahead of that 125.85 multi-year high that we saw from back in June and around the 125.30 area. At this point, there is risk for additional pullbacks with monthly studies overextended below key support at 123, which will expose the 121.30 area further down. However, if we do see a break back above 125.30, this will open an immediate retest of 125.85. Euro Swiss. So Euro Swiss had an impressive surge in recent days, with the market trading up just shy of 110 to 109.62 ahead of this latest pullback. The pullback is, however, expected given the extended technical studies after that impressive surge, and now we're expecting to see a higher low carve out somewhere in the 106.90 area, which is some previous resistance now turned support, ahead of it in favor of a higher low and fresh upside extension beyond 109.62 and above 110. Aussie dollar. So Aussie dollar put in a fresh multi-year low, a 6-year low at 72.15 last week, but the market has mostly been consolidating in the between 72 and 74 over the past several days. At this point, a break above 74.40 would be required to open the door for a more significant correction towards 77, while a break back below 72.15 would open the door for fresh downside towards psychological barriers at 70. Dollar CAD. So dollar CAD put in a top at 132.15, which was an 11-year high for this pair several days back, and the market has since been trading lower, correcting after an extended move. At this point, there is risk for additional corrective downside, with the market now focused on a potential retest of key support, which comes in at 128.60, which represents the 29th of July low. Kiwi dollar. So Kiwi dollar put in a fresh multi-year low at 64.70 last week, though this market has mostly been consolidating around the 65 area over the past several days. If we see a break above 67.40, that would signal a potential correction, a move higher in this market towards the 70 area further up, while inability to do so will keep the immediate pressure on the downside for a break below 64.70 and towards psychological barriers at 60 further down. SPX 500. So the S&P 500 continues to chop around, but overall there are signs of the market wanting to put in a major top by that record high that was established at 2137 back in May. At this point, though, we do need to see a break of that elusive support in the form of that March low at 2040 to confirm the toppish outlook and accelerate declines. Gold. So gold has been locked within a well-defined downtrend, with the market recently trading down to fresh multi-year lows below 1100, but has since been in the process of correcting a little bit higher. At this point, though, we need to see a break back above the previous 2015 base at 1142 to take the immediate pressure off the downside. Otherwise, look for a lower top below 1142 ahead of a next downside extension below 1073 and towards that key psychological barrier at 1000 further down.